What's up, everybody? Welcome to Crypt-Economy. Let's look at what's happening in the markets and what we can expect in the next year, maybe a couple of years as well. So let's have a very quick look on the tech stocks. We are having a huge pullback from the tech side. But why is that? We're going to get into that kind of in the second half of this video. Right at the start of this video, I want to talk about inflation, then we'll move to crypto, then we'll move to tech stocks as well. So let's see what President Joe Biden says about inflation. So he said we're going to live with this inflation for a while. He said this at a Democratic fundraising event, and then he says it's going to come down gradually, but we're going to live with it for a while. Now, what does that tell us? That tells us that it's bad. It's pretty much out of their hands. Even after increasing the interest rates the way Fed has been, we are looking at the CPI number hitting a new 40-year high, right? So there's a lot of downside, and we know now for a fact that US Fed has no idea what they're dealing with. Surprisingly, right? They in fact, people from the US government, from the US economic side or economic administration side, they've come out and they've said that they've underestimated inflation and they've underestimated what's going to happen with inflation. So let's look at what has happened with this 8.6% and what contributes to this 8.6% rise. Now, the energy index, that's one of the main drivers of this increase in inflation to 8.6%. That is, it rose 34.6%, which is the largest 12-month increase since September 2005. The food index increased 10%. So yes, if you were buying food at $100 or 100 rupees, today you're gonna pay 110 plus for the same item in a 12-month period. And energy index, please don't get us started on the petrol and gas prices for sure. Now, on the airline front, of course, it contributed heavily, rose by more than 10% for the third month in a row, and 40% up on the year basis, which is amazing and crazy at the same time, because right now a lot of people want to travel. They were not able to for the last couple of years the way they wanted to. Now they want to travel, and now these costs are up by 40%. That's crazy, right? So a lot of things have contributed to this 8.6% number. But what can we expect in terms of what's going to happen to the economy? Now, number one, if you guys don't know, Fed has in fact asked companies to stop hiring new people. And they've asked companies to do that so that when those companies don't hire new people, what happens is the demand for new talent stops. And the salary hikes, they stop because there's no demand for new talent. The existing talent in specific companies, they don't have anywhere to go. If they don't have anywhere to go, their salary hikes are going to get stopped. And that is also going to help control inflation, because that's going to help with money that's circulating in the economy. So that's one of the things that they've said and they've asked companies to do. And additionally, if you look at the number of layoffs, it's crazy. It's already started. Now, a high inflation and high unemployment, what's that going to bring? That's going to bring something that's called as stagflation. Now, what stagflation is? Now, stagflation is characterized by slow economic growth, which we are already looking at. How? So very simple. The first quarter of US GDP, that was minus 1.4%. Yes, the GDP grew at a negative rate. Now we have the second quarterly results that are going to be posted on 28th of July 2022. And if that comes in negative, officially we are in a recession. But come on, let's talk about slow economic growth and relatively high unemployment. That's what's going to happen, which is economic stagnation at the same time accompanied by high inflation, which we've seen. Because we see this 8.6 number and we get really, or maybe we get relieved rather. Oh, cool, this is not very high. But if you look at a net number, it's very high. 8.6% is not what we are looking at. We are most probably we are looking at kind of a 14-15% number, not 8.6%. Number two, in a lot of things that we require on a daily basis, we are looking at a 30-40% price increase, right? You want to travel, you want gas, you want petrol in your vehicles, you're looking at a 35% inflation. And that's US. Of course, now it's going to change for every country, but this is where we are. Now, stagflation can alternatively be defined as a period of inflation combined with a decline in GDP, which is what we are looking at right now, right? So what's going to happen from here on? Now, of course, what we need to see is what are people going to do? They're going to invest less because they're going to have less discretionary income. And what does this discretionary income mean? Pretty simple. Let's say I make $2,000 a month and I'm left, after my expenses, after my savings, I'm left with $500. Now that $500 is my discretionary income, which I can spend however I want. So I'm probably gonna go buy some luxury items, maybe buy an iPhone and maybe an extra set of AirPods, or maybe I'm just gonna go and shop like crazy, right? So that's something that can happen. Now all of this has affected crypto market quite badly as well. Now we've, of course, since this news came out, we've seen a little bit of a bounce at about 28,800 level, but as you guys know, more likely than not we are going to see Bitcoin under 28k, because all of this, whatever is happening, this is not a 1 week 2 week thing. We're gonna see all of this going on for probably months, many more months. And we know that, of course, Fed is going to try and increase the interest rates to kind of control the inflation, but we are going to probably see all of this for the next few months. Now, in terms of Bitcoin, in terms of the dollar strength, let's look at what other analysts are saying. Should the price of BTC continue to trend lower? Crypto trader and pseudonymous Twitter user altcoin Sherpa, pretty cool guy by the way, says trading below 28,000 is possible. Of course it is possible, definitely it's possible. I'll also explain kind of why. And multiple people are saying that, and I'm saying that too. Why? Let's have a look. Now 28.8k is where we found support, but if we look at kind of the 28,000 mark, that's been our wick mark. Like we've had one wick in the last few days, we've had another. Last year we had the same thing, right? Even literally if you look at 12th May 2022, what the downfall we saw, that also more or less got kind of good support at around the same range. Even once, if we close a candle under the 28,000 mark, it's going to be very difficult to come back up. Why? Because especially on the 4-hour chart, what's going to happen is we're going to trend sideways, probably go down, test this, maybe, and of course this support has been tested many times, so it's more likely to break, but we're going to test it, probably do all of that, and then we're going to come down under 28,000 level. But when we do, our 20 MA, our 200 MA, also our EMAs, they are going to become a very strong resistance, because they are going to be around the 28,000 mark, and 28,000 mark is already a good support. That means it's going to be a very adamant resistance once we are under it. And unless we get a great volume and at least, if not weekly, daily close above a 30,000 mark, this is going to be very difficult to then break, because of the way SMAs and EMAs work and the kind of support and resistance they provide. Now, moving on to stocks. A lot of you guys wanted to know what kind of stocks you should get into. Now, here is what I think about what's going to happen. Now, let's look at QQQ, which is more or less, if you want to kind of, if I want to tell you what this is technology index, US tech firms or US tech company index. Now, what has happened in the past couple of years, everybody was in the lockdown. A lot of businesses went bankrupt. A lot of companies had to close their shops. A lot of companies had to fire their employees. But there was one sector that was booming in the last couple of years. And the reason for tech sector booming was pretty simple. Everything that you need to do in a tech company, usually, if not everything, 90% of your job can be done from home. So they were hiring more. The salaries were very high. You were getting great raises because people were now, because it's a work from home environment, you were not geographically tied if you were a good talent, right? So tech has had a boom in the last couple of years, a really awesome, crazy boom in the last couple of years. Look what's happened from 2020 onwards, right? But now, Now, since everything is opening up, not a lot of companies want their employees to have a completely work from home job. We've seen a statement from Elon Musk as well, right? All of those things are happening, and it's gonna take the tech companies down. So this is one ETF that I'm tracking, not definitely going into individual stocks. Now we know great tech individual stocks, but safe ways to invest especially during bear markets, in my opinion, is a mutual fund or an ETF. And understanding what's going to happen with the sector, I think, has more potential, because it just kind of prevents a little bit of a downside. Now, am I saying that this has no downside? Definitely not. I see a lot of downside from here even. So, but this is something that I'm tracking. QQQ Trust. QQQ, basically all tech stocks. And I think if I just show you the holdings here, we are, let me open up. Yeah. So the biggest holding of QQQ is Apple, which is 11.2%, Amazon or rather Microsoft at 10.1%, Amazon at 7.79%, Google at 4.19%, Class C, Facebook Class A at 4%, right? Tesla at almost 4% as well. Then also Google Class A at 3.8%. So we're looking at all the notable tech names, right? 48.6% exposure to tech. So QQQ, I think, makes more sense. Now, of course, there are consumer cyclical, communication services, and all of that. But I think this is an interesting ETF to track. Number 2, consumer discretionary fund. Now, why am I tracking discretionary fund? Because during recessions, when the inflation is high, people don't spend too much. So Starbucks is going to take a hit because it's a luxury item. A lot of luxury daily use items are going to take a hit because people are going to want to spend on regular brands as opposed to hi-fi brands and pay 3 times. So less whole foods, less more expensive organic food, more inorganic food and normal stuff, right? So this is, I believe, discretionary companies. They are also going to take a little bit of a hit here. Looking at now, of course, consumer discretionary fund, it's not just Vanguard, it's Fidelity and a lot of others as well. But I'm tracking the discretionary fund, or rather discretionary funds. And Fidelity, to be specific, Fidelity is one of those which I'm looking at. Now here also, if you look at Tesla, now Amazon 22%, which is fine. Tesla, again, it's a car that's expensive. It's not a cheap car, right? Home Depot, again, not cheap. Nike, not cheap. McD, maybe there, maybe not, depends. Lowe's, Starbucks, same, right? So we are looking at companies that people spend on usually when they have more money, and more likely than not, they're not going to have a lot of money, and because they don't have that, they're going to spend less here. Lastly, that I'm looking at is consumer staples index. Now, staples index is important, and the reason I think it's important to track this as well, especially if you're looking at the US markets, is because these are the things that everybody anyways spends on. So looking at how this does is going to give us a lot of idea on what kind of savings people are sitting at, what kind of money are they willing to spend during a recession, and all of those things. And you might not want to track the ETF to be specific, because basically this is how the ETF does in the market. This is not what business the holdings do, right? So when I'm talking about these ETFs, you can track these ETFs from an investing standpoint, but make sure to look at the holdings in their businesses. So top 4 or 5 holdings, look at how their business is doing quarter on quarter basis. Same goes for the discretionary fund. Look at how Starbucks is performing on a quarter to quarter basis as the results come out. Same thing for the consumer staples index, in my opinion. So look at how Procter and Gamble does, what product gets most of their revenues for the quarter. Look at what Coca-Cola does. Look at how Walmart does, how Pepsi does. Is it water that they are selling the most? Is it juice that Pepsi was able to sell more, or is it Pepsi that they were able to sell more, right? Costco, or all of those things. You'll be able to, so if you look at their quarterly reports, you'll be able to see what business segment brings them the most revenue and the most profits. Another thing that you need to keep an eye on is the supply chain, because the supply chain has been hit pretty bad. You might want to keep an eye on their cost and their net profit numbers. Now, also, of course, look at net profit numbers, look at where they are, look at the capex, basically look at where they're putting money, where they are investing right now. Are they building new facilities? Are they investing money to kind of get the business even more growth during a recession phase? That's usually the best thing, because it helps you build a very, very strong foundation. So these are a few things that I'm looking at. Of course, along with all of that, Bitcoin and Ethereum are getting pretty interesting. I think especially Ethereum becoming weaker day by day. We are looking at a fresh low from Ethereum at 1667. I think it's a very, very attractive altcoin, and of course, because of the fact that it's one of the biggest, and because of the fact that it's really, really good in terms of what it provides to developers, to projects, and given what's happening with the merge, I think Ethereum is very, very interesting, and we should keep an eye on what's happening with Ethereum. And this price action is really cool. I personally am expecting Ethereum to go to the 1550 range. That's where I'm waiting for Ethereum to go. On the Bitcoin front, I'm definitely looking at that under 27,000 mark. If I catch it, pretty good. If I don't catch it, that's fine, because usually DCA and SIP approaches work the best for long term. So that's it, guys. These are a few things that I wanted to do to kind of talk about with you guys today, especially given a lot of questions around what should you be looking at in terms of US markets and investing in the US market. This is kind of my opinion on this. Do let me know your thoughts below in the comments, and as always, guys, if you like these videos, don't forget to smash that like button and subscribe to this new channel that I've got set up for you. Expect a lot more videos coming from me, guys. I'll see you guys next time.